Welcome back, ladies and gentlemen. Now in today's video I want to talk about the Double Marubozu Kink, or the kissing candle, or the DM Kink, or the hidden base. You can call them all those names, the four names. Now the Double Marubozu is also the kissing candle. It's also the DM Kink. The DM is just a short form for the Double Marubozu, and I added Kink, or you can call it as well the hidden base. Now these are the examples at least I want to share with you tonight. You've encountered such candles in whereby, for this case, these are two down close candles, or rather they're bearish candles. Now this, for it to qualify to be a DM Kink or a kissing candle, at least they must be the same color. It's either they're bullish or bearish. Bearish for this case or bullish for this case. They must be of the same type. Now we always have instances or scenarios whereby we have candles but have wicks on both ends, these shadows, the shadows. So it comes from the word kissing candle because you can see the midpoint of it, and this wick has entered, they're opposing each other. This one is below, this one is above, and they always have a meeting point at the center. So we have the bodies are kissing each other and the wicks are opposing each other. So they must be of the same type, and if they're bearish, they must be bearish. If they're bullish, they must be bullish. So we have this wick and we also have this wick. Now the size doesn't matter a lot, at least you must see this type of scenario. And also the size of the wick doesn't matter, because at some point we will be having this one have a long wick, this one short, or maybe all of them are short. So the size of the wick doesn't matter, the size of the body also doesn't matter. So they're kissing. You always have a central position in whereby they do meet. We have this wick and this wick, and the bodies tend to meet. They tend to kiss each other. So that is where the name comes from, the kissing candle. You can call it the Double Marubozu Kink, or the kissing candle, or hidden base, or the DM Kink. The DM Kink is just a short form for the Double Marubozu. Now it is a hidden base because if you switch time frames, maybe to the lower time frame, when you spot this type of formation, you'll realize that there is indeed either a supply zone for this particular case or a demand zone for this particular case. So it's a base, it houses either the supply or the demand. Now this setup alone can make you have sniper entries regardless of whatever time frame you are looking at, right? Now this for the Excel, for bearish candles. Now for the bullish candles, the candle wicks are opposing, they're on opposing ends, and they are bullish candles also. So they tend to kiss each other, at least it makes sense. Now we always strive to sell whenever the market retests this particular level. Where is that tool? I want to use a nice tool so that at least you can be able to see whatever I'm talking about. Let me use this tool. So whenever the market retests, whenever you spot this type of formation, just get the midpoint of them, where they meet, So if you spot this type of setup, let's assume this line is not there, just get a line, mark the midpoint of it, for this case. So whenever the market retests, just highlight the midpoint where they meet until the upper wick. So it will mark your supply level. So whenever the market comes to that level, at least you aspire to sell at this particular level, you sell. The stop loss should be slightly above. This is on the highest wick in this particular case. So it is a supply level, and it is the best for sniper. It will give you sniper regardless of whatever time frame you're trading into. Also, if the market chooses to retest this one, you mark the midpoint now, this week now will be at least our demand. So you'll be risking this portion. Now let me use blue. We use pink for supply, then blue for demand. So if the market chooses to retest, at least it will come, you buy. So stop loss will be below this week now. So you just mark the midpoint to the week, to the lowest week. For this particular case, for the sell, you just mark the midpoint where they meet to this upper week. This one, you just mark the midpoint of them to this lower week. So you'll be risking this zone to capture a certain move for the buys. You'll be risking this supply level to capture the sell. So if you shift your time frames, at least you'll be seeing that indeed it's a hidden bear. Is why? Because it is housing either a supply, for this particular case, for a supply region or a supply zone, and this one a demand. Buys, we talk of demand. Sells, we talk of supply. So this one alone, you know, can make you have snipers in a trading journey. So it's all about trying to spot them, regardless of whatever time frame you try to spot. Now, trading them alone is not enough. At least you must have a framework where is market going to move. For instance, let's assume that the market has been selling now. So any retracement to this particular level, because the structure has been bearish, you now are convinced to sell. But if the market now has been bullish and you spot this one, it is nonsense for you to sell because the structure has been bullish. So it all depends on the structure now. Now I want us now to dive into the charts. At least we can check on the examples. Let me remove the drawings. Now, this is a very nice example. These are down close. I said the body doesn't matter. So we have this one, we have this week, and also have this week that are kissing each other, and their central position where they meet is at this particular level. So you risk this level this week, the midpoint where they meet until this week, at least to try to. So this is the daily time frame. This one panned out last year. I took the sell, and you remember I said I always like supply and demand in gold. This is gold, you see. So this was the kissing candle. The body doesn't matter so long as they're of the same color. They are both bearish at this particular level. So we have marked the midpoint where they meet, because we have this week. We also have this one and this one. This one was bigger than this one. They said it doesn't matter. So they met at this particular level. So whenever the market was showing a willingness, at least because it broke this structure, now it was nice for us to confirm our sells. You know, so this break of structure is signal potential selling. So see, it was a snipe even in the daily time frame. The market dived into it and it took this sell. So this one with me last year can test to that. So it was a very sniper. You are risking a very small zone on the daily time frame. So this one you can get sniper in any time frame, you know, any time frame. So it was a very minimal stop loss, you know. They must be of the same color. Now at some point you'll realize that indeed you are anticipating maybe the market to reach to a level, a certain order block, but at some point the market will never reach to the order block. Like this one, this was the order block, this last up close candle before the move down. The market never reached. But if you knew whatever the market was into, at least you could have seen that the market was coming for this hidden base. Because if you just switch time frame, you'll be able to see that indeed there was a supply level, of which I'm doing that in a few. So at least the market reached at that particular level and it sold, you know. And it was a level also whereby we are having some sort of QML level. So QML level, you are looking at a supply level near the QML level, because the QML level is just a level whereby potential reversal is going to take place. If you've not watched the video, try to get it in my channel. Now, this is the QM level. It is just a signal that around this zone we're anticipating potential sales, but where specifically there must be a supply zone. This kissing candle is also a supply zone in its sense, because if you switch time frames, you'll be able to see that there was a supply level in this particular area. So there was QML, high, low, higher high, then the market posted a lower low before retracing to this kissing candle. Let me switch time frame so that you can be able to see very, very carefully. Can be able to see there is a supply level indeed. This up close candle before the down move, it's our supply level, so the market reacted into it, dived into it, then sold off. So if you switch time frames, it's just a matter of supply or demand residing in those zones. You see? Let us see another example. So basically it happens in any time frame, not only the daily time frame, in any time frame. Let us switch to the H1. So if you spot it, at least just to be convinced. Now for this particular level, I don't know if it reached, it never reached, it's okay. There was one that I wanted to show you in our last video about the QM setup. I don't know if this one reached. Yes, this one also reached. You can see the this is now for the buy scenario. The market has been breaking structure to the upside, and there was a lot of liquidity that was residing below the marketplace, this particular low, and also this short-term low. But you also have this candle, the kissing candle, or the hidden demand for this hidden base. Now there was demand for the case of buys. So you mark where they meet at the central position, they meet at this particular level. You can see this week and also this week, so you risk this zone. So for demand we use blue. You can see. So this was the 1 hour time frame. You can see it was a sniper, so the market dived into it without hesitation, then jumped, it slammed up, it jumped rather. So it was a sniper. So in any time frame where you spot it but you have a narrative, the market gave an inducement, took out the liquidity that was residing below this short-term low and also this low into it. So rather than risking this whole zone, at least this whole zone, the order block, at least you can see the risk is big. You can just waited patiently the market to dive into the kissing candle, then take your buys from. So it happens any time frame. So this is the 1 hour time frame. So ladies and gentlemen, try to check and backtest, look for examples. At least you must have a framework. Structure is very, very key whenever you are dealing with such, At least it can help you to frame your trades in a very fair manner. Now we have the kissing candle, then we have the opposing kissing candle, of which I'll talk about it in our next video. So guys, ladies and gentlemen, hopefully it has been an eye-opener also to things you never knew. So see you soon and wait for more. If you've not subscribed, subscribe, because more content is coming, at least in bits. So relax.